Monday, August 29th, 2022, Monaco 64, home of alternative economics and contrarian views. So I really think we are in uncharted waters. The whole economic, financial, monetary structure of the Western world, and for that matter, the whole world, is coming severely under pressure, in my opinion. And I think a banking crisis looms large over Europe. And after a banking crisis, you have a sovereign debt crisis. And yes, the United States dollar looks very strong right now, or the US currency, really. And I think that's a trap. And I'm not just trying to say that because I'm a gold bug or a silver bug. It's more because of the way things work, and we're going to look back historically at a crisis that feels, well, in my opinion, was relatively similar to the current ensuing crisis. And before we go into the topic, though, I like to look at the 2004, they call it the Banda Aceh tsunami, the Indian Ocean earthquake and tsunami. I'm sure most of you have seen footage of that. One of the footages that really got to me, impressed me the most, was when the tide started receding by the beach somewhere. I think it was in Thailand, I'm not sure where. And everyone started going out into the beach. People were very complacent. And all of a sudden, after the tide receded massively, people had never seen it recede that much. Then the tsunami came. So it was a really, it was a trap. And I think that's what we're seeing now. The strength of the dollar is going to, in my opinion, people who think that the dollar is safe, just like those people who thought that the tide receding back in 2004 during that tsunami was safe, they're going to get wiped out. They're going to, they're not going to survive financially. And that's how I see things as it pertains to the dollar. There's only one safe place to be in a tsunami. That's in a high place. And I think there's only one safe place to be in a banking and sovereign debt crisis, and that's high up on the monetary hills of gold and silver, I would say. And the reason why I think a crisis looms, banking and sovereign debt. And why sovereign debt? Well, because the banks are everything in our current system. And with the economies in Europe going to a winter that we've never seen before, well, since maybe the end of World War II, for the losing nations there. Yeah, what it will mean is that businesses are going to fail, not just in the EU or Europe, but in the UK with all the costs of energy. When businesses fail, people are going to be let go. There will be unemployment. Loans are not going to be paid by individuals. Loans are not going to be paid by small businesses to commercial property landlords. Commercial property landlords won't be able to make their mortgage payments. A lot of them have mortgages with the bank. So it's going to be a daisy chain effect. And then at the end, of the banks as well, of course, are the big holders of the government's debt, national debt, financial institutions as well, insurance companies, fund managers, pension funds. They're all going to be affected. And eventually, yes, the countries will be in trouble. And I think that's what we're seeing already with the strong dollar. A lot of investors are fleeing these peripheral currencies like the euro, the pound. Yeah, they're not that peripheral, but relative to the dollar, they are. And I think that's what's happening. And we're starting to see as well Government bond yields starting to rise, which means people are not really comfortable holding those assets. Even in the US, we're seeing, despite the strong dollar, people fleeing away from treasuries as well, and the stock market. And even the people who partly own the Federal Reserve, the Rockefellers, are seeing a post-dollar world coming. This is not just me here and other people on the alternative economic and finance side. Yeah, this is Ruchir Sharma, who's the chairman of Rockefeller International. I don't think, though, he sees this crisis, though. He just thinks the world will easily graduate from having, or transform from having, the dollar as the major reserve currency to having blocks of reserve currencies like the BRICS and the dollar and maybe the euro. And I think he's been complacent as well, or maybe he does know. But this is what he wrote here in the FT yesterday. So this is not just me. He says here, this month, as the dollar surged to levels last seen nearly 20 years ago, analysts invoked the old TINA, there is no alternative, argument to predict more gains ahead for the mighty greenback. What happened 2 decades ago suggests the dollar is closer to peaking than rallying further. Even as U.S. stocks fell in the dot-com bust, the dollar continued rising before entering a decline that started in 2002 and lasted 6 years. A similar turning point may be near, and this time the U.S. currency's decline could last even longer. So this is not just me, as I said. So even the people who own the central banks, the Federal Reserve, yeah, the Rockefellers are related to Citibank, First National, which became Citibank. They're big shareholders in the BIS and the New York Fed. So these are the people who are saying this, not just me. So I mentioned earlier about the fact that this happened, similar thing happened before, and it was in the early 1930s. And this book here, which I highly recommend if you're into money and markets, called The Lords of Finance, 1929, The Great Depression and the Bankers Who Broke the World, Liaquat Ahmed. So there you go. It's a great book. And there's a couple of chapters here in the book. Let me get through to it here. Chapter 19 says, A Loose Cannon on the Deck of the World, 1931. And they have a quote by Napoleon Bonaparte. This is what he said: Money has no motherland. Financiers are without patriotism and without decency. Their sole object is gain. But that's just a quote that he put in the beginning of the chapter. But more importantly is what happened in May 1931. And that was when the biggest bank in Austria went bust, Credit Anstalt. That's what it was called. So it says here, on Friday, May 8th, the Credit Anstalt, based in Vienna and founded in 1855 by the Rothschilds, with total assets of 250 million and 50% of the Austrian bank deposits, informed the government that it had been forced to book a loss of 20 million in its 1930 accounts, wiping out most of its equity. Not only was it Austria's biggest bank, it was the most reputable. Its board, presided over by Baron Louis de Rothschild of the Vienna branch of the family, included representatives of the Bank of England, Guarantee Trust Company of New York, M.M. Warburg and Co. of Hamburg. After a frantic weekend of secret meetings, the government made the problem public on Monday, May 11th, at the same time announcing a rescue package of 15 million, which would borrow through the Bank for International Settlements. So what's this got to do with what's going on now? Well, this Credit event triggered a massive credit banking event in Europe. And by September 1931, Britain came off a gold standard, which was a default. And then a lot of capital from Europe started flowing into the United States because the United States was still safe, a safe financial place to be. So a lot of capital flowed into the US banks. And it's really interesting because I think the same thing is happening right now, and it's not just from Europe, it's from all over the world. A lot of capital is flowing into the US currency, but not because the US economy is doing well, because if it was, the stock market would still be doing well and the bond market would still be doing well. I think it's because the smart money, like the Rockefellers and others, they can see it coming. And then the next chapter, though, talks about, let's have a look what it says here, the next chapter. Next chapter is chapter 20, of course, 1931 to 33. It's called Gold Fetters, you can see here. This is basically talking about how the whole of Europe basically went bust. It was a sovereign debt crisis because at the time gold was part of the system. That's why a lot of capital went to the US. But on page 434, this is what it says here. No one had done more to prop up Europe that summer than George Harrison. Who was George Harrison? He's not like a rock star. I think it was the Beatles or George Harrison. No, this was the president of the New York Fed, or the guy who ran the New York Fed. It must have seemed to him at times that he had spent most of the summer on transatlantic telephone calls. At the height of the central bank European crisis, he and Norman, that's Montague Norman, the governor of the Bank of England, must have spoken on the phone, not a simple matter in those days, more than 25 times. After the first Austrian loan back in May, Credit, when few could have foreseen how far this panic would go, the Fed had provided the Reichsbank with 25 million, been ready to throw in a mammoth 500 million for the second loan that never got off the ground, supplied a further 250 million to the Bank of England, and finally been instrumental in orchestrating the last 200 million loan from the Morgan Consortium to the British government. It had all been to no effect. Europe's problems had proved to be much deeper, and it needs far larger than the Fed was capable of handling. So nowadays they've been doing this since March 2020. The swap lines is exactly what the Fed did back then. And now as well, they're providing this, I think it's a repo facility. It's like 120 billion. It's providing that facility to the European primary dealers with the New York Fed. So that's continuing, but it seems to be to no avail like it was back then. And here's the interesting part, though, when things start turning. After Britain left the gold standard, the financial crisis now spread across the Atlantic. Over the next 5 weeks, Europeans, fearing that the United States would be next to devalue, converted a massive 750 million of dollar holdings into gold. While some popular accounts attributed the outflow of gold to panicking millionaires and speculators hoping to make a buck from such a collapse, it was not private investors who were principally behind the flow of, but European central banks, the largest single mover of capital being the staid and upright Swiss National Bank, which transferred close to $200 million. The National Bank of Belgium moved 130 million. An already badly burned Netherlands bank, 77 million, and the Banque de France, 100 million. Having lost its capital 7 times over during the sterling devaluation out of a misplaced sense of solidarity and politeness. So what this did, this gold outflow, it affected the US banking system. And by 1933, when Roosevelt was inaugurated in March, he had to declare a bank holiday, and then he had to sign into law the Executive Act that banned gold ownership and confiscated Americans' gold. Well, because there was a rush on the system, a rush on the banks, and the banks were closing left, right, and center. And it started in 1931, and it started in Europe, and it went into the States. And then by 1934, what happened? The Europeans who were cashing their dollar reserves into gold, they were right that there would be a devaluation and of the dollar against real money or gold. So yeah, in the beginning of 1934, the Gold Act of 1934 revalued the price of gold from $20.67 per troy ounce to $35. And a lot of the very wealthy Americans and Europeans who were in the know, the central banks, they transferred a lot of the American gold out before that. So, and they made a killing. And the people who really got hurt were the general public, of course. But back then there was a deflationary depression. I think now we're going to have a hyperinflationary depression, because they talk about the fact that the Fed in 1931, because of the outflow of gold, they raised rates to keep the gold. And the real rate at the time was like 8%. Now the real rate in the US is more like minus 8% if you look at the real inflation rate, I would say. So that's why I see things very dangerous right now. And today the UK is closed, the UK markets, because it's a bank holiday. And I spoke about the fact that the UK could be the first domino to fall in this sovereign debt crisis, and it might well be. But we're seeing now the 10-year Italian BTP yield, or the Italian government bond yield, up 15 basis points today, and we're fast approaching 4%. We're at 383. Recently, we got up to I think 420, 440 in the beginning of the summer, end of spring, and then it came back down to around 3%. So things are getting very interesting, and we're going to keep an eye on things. And for those of you who have been stacking, yes, hold on, because things are going to get crazy, I think. And eventually, like the Banda Aceh tsunami, is going to wipe out, unfortunately, a lot of people. Not physically, of course, but financially. And that tide receding, I think, is like a great analogy for what's happening to the dollar. The dollar rising is a big trap, I would say. So with that, let's quickly look at where the markets are this morning. It's 8:35 a.m. London time. So things are continuing south. The stock market, the Dow is down another 0.5%, 160 points. NASDAQ is down 1%, 123 points, and the S&P as well is down 0.2%. Gold and silver, I thought, especially gold, did relatively well compared to a 3% drop in the stock markets on Friday. Today, though, we're continuing lower here. Spot gold is at $17.22, down about 16 bucks. High has been 41, and we're right near the lows. Silver as well is getting hit here, down 1.8% at 1855. Don't forget the Banda Aceh tsunami. Anyway, to the currencies. So yeah, the dollar is still very strong. We've got the pound continuing to drop. We're almost back to the 2020 lows here, 116.76, down 0.5%. Low has been 116.50. The euro is down 0.25% at 99.40. The dollar is up almost 1% against the yen, 138.72. Dollar is up a third versus the Swiss franc, 96.89. The dollar is very strong as well against the yuan. We're approaching 7 now. We're at 6.92, up 0.5%. The dollar ruble, on the other hand, is still very steady. We're still trading around 60. It's at 60.5. Checking the other currencies, the Aussie dollar is down 0.5%, 68.60. The dollar is up 0.25% versus the Canadian dollar, 130.62. And the Kiwi dollar is down a third at 61.11. General commodities, WTI crude is up 1% actually, just below 94. And Brent crude is up 0.7%, just above 100. High-grade copper is down 3% at 358.07. U.S. nat gas up almost 3% at 954. Just going to check the European natural gas future. Well, that's down about 12%, and it's back below 300, but still highly elevated, I would say. And the U.S. Treasury market or bond market, the 10-year yield is up 8 basis points at 311. The 2-year is up 8 as well at 347. So a 36 basis points inversion. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. And think about subscribing to this channel if you haven't yet. And with that, I wish you all a great start to the week. Take care. Bye.